Testing, 1, 2. Testing. Welcome everyone. I'm kind of screwing up all of our schedules. I can't be in the office tomorrow, so we're going to do this today. So we'll have a good time. Markets rallied back here. About 7 or 8 handles just out of nowhere. Welcome, Vincent. Yeah, Ian, as far as doing other markets, I've been considering doing some things maybe once a week or something. I'm trying to put a schedule together to cover a broader market. Since I do videos every day, everybody's gotten used to having certain things out there. So, yeah, I'm looking at a lot of stuff. So I'm going to get a few things set up. I'm glad everything's working fine. Just one last, it looks like we're getting some good sound coming through, and we've got 1080p, correct, everyone? Yeah, here's the daily gold chart I put up here. We're all the way up at trading at the EXT number, which is the extreme projection for the day. Yeah, so this is a 5-minute chart of gold. I'm going to leave that up. I'll be back in about 5 minutes. We'll kick off today's show and go through a lot of stuff. Yeah, we can definitely, I'll talk about the PPMs, no doubt. Okay, everyone. Sorry it took me a couple more minutes to get ready. Welcome to the Kendall Report, and we have a lot to talk about. There's some crazy shit going on this planet, like always. I saw a couple mentions of the explosion in Beirut. We'll take a look at crude and some other things out there to see what's going on that's going to affect everything that we're doing. Yeah, so Jay, you should hear the sound now. Okay. I think today we'll start off just as we always do, just talking a little bit about the backdrop of the markets. I'm going to put up my primary screen here. This is still gold. Gold is trading up almost 2%. So that little pop in gold was obviously completely related to the Beirut situation. I'm sure if we went in and let's put a 5-minute graph on. Yeah, so most of this we were actually trading down a bit, and then we saw a nice rally come off of here. This is a 5-minute gold chart. But we're going to start as we always do. We're going to look at the S&P, talk a little bit about what's going on here. I'm going to be talking about our database and what's going on there, because in the videos at night, I really don't have a lot of opportunity to go a little more in depth, but I think it's important to understand what's going on with the database. And I know a lot of you folks watch different channels, and mine is unique just in the fact that when I bring up our software, that we are actually a quant firm and model 16,500 symbols. There's probably about 5,800 are actually individual stocks, 5,800, and their balance are ETFs and mutual funds, both equities and bond mutual funds. So that's our whole database that we have right now as far as the things that we watch. Some folks continue to ask about international markets coverage and stuff like that. I'm not sure where we're going to go with some of these things, but I'm looking at a couple of things where I'm going to put a schedule during the week to cover certain types of things, which I think will be helpful. I have a meeting after we finish today, which I'm excited about, and we're trying to get the cryptos in on the WaveTech platform. We've been messing around with this thing for several weeks. Hopefully, we will finish what we need to do today, and we're going to spend the balance of the week testing, and so the release will probably be next week, and that'll be exciting because there's some pretty good signals coming on. It is right now end of day only. We don't have the intraday stuff. Some of the hourly and shorter term stuff is better, not necessarily better, but can be more effective for some of the shorter term trading. Yeah. Let's go to a daily chart on the ES, and this is something I talked about in last night's video that I think needs to be talked about just a bit more, is the lack of momentum in these new highs. And this is, I used the word dangerous. I almost took that out last night when I said it. I thought, oh boy, all the trolls are gonna go crazy on me. What's happening is there's a number of things, not just on the momentum, and I'm going to show you here in a few minutes, but the backdrop in the database that we're following. We're seeing a lot of selling coming in. I believe in the last 2 days, 2,000 symbols have been liquidated. And a lot of them are the stuff that I talked about. Some mutual funds, ETFs are getting liquidated, and these are short-term signals. but all of this stuff that's happening here, this is, you folks have been following me for a while. I see a lot of names that I know. I've been talking about this trade, and I'm gonna put a trade on the chart here in just a minute that we've been in since, I believe it was May 4th at 28.44. We've been long the S&P, which has been a great trade. I've talked about this pattern that we're seeing here. I call it the creepy crawler. It just keeps going up and up, and it doesn't get any big volatility spikes down. The last time we saw that was after the June 9th high, and we traded back down to 200-day moving average, and we've been steady inch by inch going up. And there's a lot of things going on here, but this lack of momentum is really concerning as we look at the PPMs. And someone was asking about the PPMs, and I'll talk a little bit about these today as we go through a lot of charts. The PPMs are proprietary indicators that I developed back in 1984. Yes, that was 84. Actually, technically, it's probably 83 when we started working on this concept. But the PPMs are actually measuring the percent changes of the moving averages, which are the ones I use are 10, 21, 40. The only Fibonacci number is 21. It just turned out that the patterns that we were looking to identify, the 10 and 40 helped us to manage those portfolios and our trends much better than other numbers. So we tested a lot of numbers during that time. 21 we'll go through some of this stuff, and we'll get too educational today. But the bottom line is these PPMs, they're price pressure momentum, so they measure the angle of attack of a trend. And there's a couple things. Matter of fact, I'm already too far down to leave some of you that are first-time watchers hanging out. Let's just, there's something I talk a lot about. I'm just going to draw some lines on these PPMs. And I talk a lot about that momentum precedes the price movement. So you'll see a lot of momentum in the very early stages. And I have 3 indicators here. They're PPM 1, 2, and 3. And I break down every trend, whether it's a 5-minute graph, an hourly graph, or daily, weekly, monthly, into 3 segments of the three segments of trend. And so I can break down micro trends within a trend, if you will. So this is important to understand, and it was also important to understand way back in the 80s when we started developing trading models and different types of quant models that we were working on way back in the early days with spreadsheets and other types of things. The technology that was out there weren't all the different platforms that you can trade on like we have today. I mean, I'm so envious of all of you guys that are started trading in the last 10 years. You know, I grew up started with VisiCalc on an Apple II, crunching numbers on a spreadsheet. And there was nothing like this that we have out here today. So, and the good news is I got to grow up with all of the technology and have been part of that. But the PPMs, this whole theory is that we're going to see momentum precede price action. I've done this presentation before, but each one of these, I'm drawing up basically where these peak momentum happen. And then what will happen, you'll get a move down in these indicators. And then you get what I call this flat line here, which is the trend maintenance mode. Now, the thing that's bothered me, and I'll take all these lines off here in a minute, the thing that's bothered me about the current momentum is that we're starting to drop below the first and second derivatives. So the green and the cyan line are the first and second derivatives of the percent change. So the whole concept, I'm a little deeper than I thought I was going to get in this. The whole concept is that what we wanted to figure out back in the 80s was when was a trend line going to be a valid, or when was a moving average going to be a valid trend line, and when was it going to be, when was it going to fail? So was it going to hold, or wasn't it, or was the market going to be able to decline below it or move above it, whatever the direction of the trend is? And we also looked at a lot of trend numbers. So you'll hear me talk a lot about trend phase, and anything over 0.25 on these indicators are an uptrend. And I want you to notice on the far left-hand side, I'll draw some arrows here, that we are below trend phase on all of these. Now, when we go into this maintenance mode, typically what we want to see is a 0.15 maintenance. And we're at 0.13 on PPM1 right now, 0.18, so we're right at that number, and then 0.06 on PPM3. And what it appears is going on, from my viewpoint, is that this market is, while it's making new highs, it's starting to form the top of this particular pattern. My expectation is I'm going to go through a weekly chart here in a minute, and we'll go all the way to the monthly, because at the beginning of the month, we also have a lot of new numbers that come out from the standpoint of the market grid that I talk a lot about. And I'll show you all this stuff because this is important context. Even though some of you have already heard some of this, this is going to be important to understand, and maybe you need to hear it several times. You know, I studied this stuff. This stuff is part of me. I've been doing these PPM since literally 1984. We were on an old program called CompuTrack. It was $1,000. You had to buy data and had a 600 baud modem dialing in to get data every day. But this overall pattern that you're seeing here with all the arrows and everything is we have been in this maintenance mode of this trend. Now I'm going to bring up a trading model here, just so you can see the last trade that came out of the models. And you'll see over here, I'm putting a cursor on here. This is is 5.5. I said 5.4. 2847.75 was the buy signal, was the last buy signal on this 3.2 model. And 3.2 is the model that's going, I see some comments about what I always call the creepy crawler, is the model that actually can handle the creepy crawler. I could show you, and maybe I will show you, if I put our other model up, we have two models, 1.2 and 2.2. I guess we could have come up with more creative names for them. But the one model, it reacts to much shorter term. It reacts to the noise more than the other model. This model is capable of staying in these trades for a long time, and as long as certain characteristics stay in place, it is going to ride this trade. So 2847 is where we're long from. You know, we're printing 32.98. Well, let's see here. 32.91 on the futures, and of course this is a nearest future chart, so it rolls over as well. So there's a rollover in this trade because we've been in it for so long. And I'll go through the database in a minute and what I see is going on there, because all of this is going to make sense in a few minutes. In that I'm going to tie together the trends, the slowing down of momentum, and ultimately the internal action that I'm seeing inside of our database. And most people are drawing trend lines and doing very basic analysis. Whenever and I know trend lines are useful, but I just, my eyes roll in my head when I see a trend line. I'm like, oh boy, because trend lines are very subjective where they're drawn, and I just never found them useful. I did find moving averages useful, and I did find understanding moving averages at a very high level useful. And this process that I'm talking about and showing you, we actually started in 1983 developing this. So it's yeah. So yeah. Hey Brett. Hey, by the way, thanks for the stuff I didn't get a chance to answer to you. But awesome, man. Thank you so much. We'll be talking later. But yeah, I miss my old Hayes modem too. I think I actually had a 300 modem. But this pattern that we're seeing here is actually very very orthodox in how these trends unfold. So let's go on and let's take a look at two things here, and then I'm going to go to the database, and then we'll be done with that. We'll start taking a look at some of these other markets that are moving around. Yeah, just a real quick comment. Somebody was saying, what does it take? The Fed is pumping and preventing. You know, the Fed's pumping only works because we believe it works, right? It's one of those things. It does obviously pump assets, but they don't have complete control. The markets can, the dog can wag the tail again, not the tail wag the dog like they've forced it to happen right now. So I don't see, and it's interesting because I don't see any major declines. And we're going to unpack all this here as we go through this, because this will be, this whole little thing that I'm doing right now is what I always want to do at night, but I keep my videos to 12 to 15 minutes so we all can go on with our lives, get enough information to move on. But so I'm going to take the models off. We're going to go to the weekly chart now, and we're going to start talking about what's going on there. And I'm going to switch over to the cash market here. I'm going to the SPX. And this chart here, we keep climbing in this upward slope pattern. And one of the things that is happening when we go from the daily and the loss of momentum, the short-term rotation I'm going to show you in our database that's occurring right now, and then we start to look at the intermediate. The intermediate is trends are still expanding. And I explained this last night. I'll wait till I go through the database to talk a little bit more about that. But the upper end of this range here, the upper end of the range from a market grid on a weekly. So the market grid, folks, is a calculation. It's a volatility calculation based on a 3 and 5 bar look back in as far as what the ranges have been over the bars. So this process will run on a 1 minute graph or on a 1 month graph, and it will generate some numbers, and it has a way of calculating from the last known close a sequence of Fibonacci up and down. It's not a high-low projection. I was in some kind of little Twitter discussion with somebody trying to figure out what it's doing. It's actually a fairly unique calculation. And so when we look at the weekly, as we look at the weekly here, you're going to see the projected range so far for this week was the R1 was 32.91. We're trading just above that now. We've traded 33.03 and change today. Almost a perfect hit on the S1. Let me just show you that real quick. I'm going to flash over to daily here on the cash. So you'll see the range for today, 3303.81 was the actual projection for R1, the highest 3303.05. So that is a big resistance point, and I also talked about that in the video last night that this is a key pivot. We need to get above this number by tomorrow's close. If we don't, we could see a decent rollover. And when I say rollover, I just mean the market's going to backtrack here, and the ranges are going to print us down into maybe 3260s, not a collapse in the market or of any sort. But sometimes these high-level consolidations actually end up to be a top. And I'll show you in the database here in a minute. But back to the weekly. Hopefully I'm not losing you. Back to the weekly. The weekly projected ranges are R2 is, and I discussed this, that I thought we could see a S1 R2 range this week. And if you're new to the channel, what I do is all of these numbers, everything, I have them on any increment of chart that I look at, but daily, weekly, monthly, there's a market grid that goes on our channel that I post and update every day for SPX. And I get a lot of requests for other numbers, but the plan is, this is the TradeStation platform. The plan is for us to have, we're working on getting the App Store going, and you'll be able to get this indicator, and you can run these market grids on any symbol that you want. So, but this range at 3314 is the number that I talked about in Sunday night, Monday's video, is that is probably the target for this range. I thought there was going to be enough momentum to carry us through that 3280 number that we've been talking about for a couple of weeks. We've done that, and there's still quite a bit of upward bias. If we start to look at the PPMs on a weekly basis here, we got plus 0.81, 0.96, and 0.19. So, and the one that I want to make reference to here that I think is probably the most significant is this one here, is PPM2. It is skyrocketing. And what that is following, PPM2 is following the cyan line, which is the 21-week moving average. And that thing is turning up. Right now it's at 0.96. We're not anywhere close to it, but it's 29.58 and rising at basically 1% per week right now. So it's going to be climbing up every week, and ultimately it will get back above the green line, which is the 40-week moving average, and these will get into a trend mode. So there's no major rollover. I know I see all these folks out there that are talking about, this is kind of funny, folks. I've been as an analyst, I've been an analyst at a couple major firms. I worked in Merrill Lynch Research Department for a while. I wrote newsletters. I've done all kinds of stuff for 40 years. I won't bore you with my resume, but when there's something that you need to know. The longer term the prediction, the most likely you're going to be wrong. Okay? So if I have made a couple multi-year projections that worked out, but they were based on math, not on some, I guess, crazy stuff. So everything that I'm doing is data driven. Everything is actually coming out of the math that I've created around the markets over the last 40 years. So as we go through this 21-week moving average is going to be a major support line, and it's rising. So we're going to be above 3,000 and nothing flat within 2 weeks. And that means that the bottom in the range would be, the extremes would be probably down around 3,000. I actually think the extreme that we could see if there was any surprise correction or sell-off, that the is around 3160, maybe 3120. But all this stuff tells us this acceleration in PPM2 is telling us that the markets are not going to decline, and the positive slope on ppm1, I'll point over here, 0.81, 0.26 ppm2, even though it's crossed its first derivative, this goes to what I was talking about earlier. Momentum precedes price, and we're seeing here, I'm just drawing a couple lines in here. In fact, I'm going to clean this up and start over. So on the momentum side, we get this increase here. That I don't know if this is the peak, but all three of these are going to peak at different levels, or different ranges, because they're longer term. So what happens here, this is the downslope I talked about. This one has not started the downslope. We should see it flatten out at some stage, and the same thing will happen with the ppm3. And what that tells us is that we're probably in this giant channel going up. So there's, right now, based on all of this analytics, we're going to remain in this range, and there's, I'm going to put a 60+% probability that we will take out the all-time high. And this is, you know, so a lot of folks are always trying to put me in a box. It won't work. I absolutely are dynamic. I could do this show talking about this stuff today. Markets could show up and tell us a different story. I'm going to go with the market, not with what Bob thinks. This is the way it's always worked. Okay, so I'm getting deep here, folks, but this is okay. You'll see. Now, next thing I'm going to do is I'm going to bring up the database. I'm going to bring up our daily database, and I want to just discuss what's going on. And I'm working on getting some better metrics. This product that I have up, this is a WaveTech platform. You can actually subscribe to this platform, and you can have access to all the 16,000 symbols and build portfolios. We do a show on Thursday if you haven't. Usually it's today we do WaveTech. I have to be out of the office tomorrow, so I can't do our normal pattern this week. I'm messing up all of our schedules, those folks that are following me on the channel. And, you know, I had a birthday Saturday, so I turned 68. So I keep telling everybody I talk to, give me a birthday present. We're real close to 20,000 subscribers, so subscribe to the channel and give me a great birthday present. So the when we start to look at the database here, the thing that I've been talking about, if you haven't watched the channel and you're new watching, we have 16,559 active symbols in our database right now. Right this second, there are 12,713 symbols that are long. And if we have a long symbol in our database, that means that that it has a probability of trending higher. So everything that we do based on math, on probabilities. Thank you everyone for the happy birthday. Isn't that nice to solicit your own birthday? Anyway, but the 12,700 symbols, and these things have been long for a while, and you can, it's best illustrated if we look down in this list below. And I know I'm spending a lot of time with this, but I just don't get a chance to do this whole thing justice on the nightly videos. So drawing some arrows here on some key sectors, and we've already seen some recycling of the sectors here a little bit. But right here, and I'll explain what our models and what this database does. So I've put a bunch of arrows here. These are our custom indices that we have in our software. These are not, they're not off the street. We use a non-weighted basis as far as generating these indices, and we cover a very broad I could bring up financial, but there's quite a few symbols in the financial. It's actually the largest sector in the system. But these are short-term trades, and you'll see that it says, we'll go with this first one here. It's 62 days of 33. So what that tells us is we have a data map for every symbol in this database, all 16,500. What it does is it tells us what the average holding period is, what the expected returns are when we get a buy signal, what the average loss is, what's the minimum hold, what's the maximum hold. So there's all types of metrics here to give you insight on what's likely to happen from the standpoint of market returns and holding periods. Well, these have all exceeded, in some cases have nearly doubled their holding period. And this has happened throughout the database. And this has happened because of this V bottom that we had going back to March. You'll notice that some of these symbols, this is the date where healthcare was bought on 4/24, services 4/27, 4/27 on this one, and 5/6 on financial. And you can see also the returns on an index basis. This has been the returns, and the best one has been surprise technology, up 21%. Now there's a lot of symbols in this thing. These are all individual indexes in themselves, and we break everything down by sector to industry group to individual stock. So the reason why I show you this is this database, the 3.2 database is, or the database, the 3.2 models are the most optimized for the short term. Otherwise, there's more symbols that work on 3.2 than there are 1.2. So all of these have gotten very long in the tooth. That was a really long answer to maybe an easier question, but I want folks to understand exactly what's going on with this database. So when you see this type of thing happening here, this is why I've been talking about a rollover, internal collapse, I call it. I'm getting a little dramatic on some of the words I'm using. But the internal collapse is this database up at the top here, where it says 76.77 long. That got up just above 90. It backtraced to about 65, and then we went back to 88. Now we've had about a 12% drop. My expectation is this will go down to around somewhere between 50 and 40%. And when that happens, it's going to wash out all these short-term trends. These trends are going to back up. A lot of stocks that have been a little frothy are going to correct. They're going to stabilize. And then the next round of buying that we have on the short-term database will be, I'm calling it the rally 2.0 at that time. And I'm trying to estimate, so don't, people are going to hold me to this. I get how these channels work and everything. But the bottom line is it's going to take at least 4 to 8 weeks for what I just said to happen. And everybody, we live in the world of instant gratification. Everybody wants something today, and I get it, but it's not going to happen that way. What you're going to see is a very methodical rollover on the database, and prices don't have to change a lot. This doesn't mean there's some big collapse. If we went to 3160, that would be perfect, especially after printing just above 3,300, depending on where this particular top comes in its market. So last high we had was on June 9th. We got a little pullback, went back to the 200-day moving average. This is where that rollover I was just talking about happened, where we went from 90% down to about 65, 67% on the database. Then we went back, as we climbed back up, we got back to 90% again. And now we're looking at this secondary sell-off. And usually the secondary sell-off is like I call it an echo rally. You get the initial rally June 9th, you get a consolidation, pullback in stocks, and then the database rotates again. And most folks that very few people, I don't know anyone else that can see the world at the way that I see it, just because These are all my concepts, my models that I built, that I know are authenticating and generating buys and sells based on my theories that are in there. So I can have a high level of confidence. And I've never done a show like this. Those of you know, we started organically from zero just about 4.5 months ago. We went from 0 to 20,000. I've never done a promotion. You've never had to see me with a broken arm, you know, promoting how I make money in the first half hour of trading, the guys that are buying ads on my YouTube videos. That's not me. I'm not that guy. Well, what I do is present information, and you folks have shown up, and I'm grateful for that. And it's actually given me a new view on the world. And I'm really, so I'm really excited about our community that we're building. So anyway, so all of this stuff, rotation of database, the lack of momentum in the short-term charts are telling us that the focus of the market is narrowing down. And when it narrows down like this, this is the beginnings of at least a minor top. It was a little more dramatic back on June 9th as we came into that top. Things were moving a lot faster, volatility was a lot higher, all that kind of stuff. So I think I did a lot with the database here. I'm gonna go back to live trading here. We're still hanging right around 3,300 here on the S&P, but all of these patterns that are unfolding, you know, you have to be very patient. And I worked with a company once upon a time. They still exist somehow. I'm not sure, but anyway, but one of the processes that we've always promoted and I've talked about is you have to be disciplined. That's why we have the quant models. You have to be organized. You have to be focused, right? And the hardest part is being patient, and especially when volatility has been like it is. But if you notice, volatility is just collapsed. And I'll show you a couple things here. You have to be what I call independent and confident. When you get into the confidence is when you believe in what you know. And that's one of the hardest things. I've taught a lot of traders over the years on how to trade. And I don't care what your methodology is, but you have to believe in what you're doing, whether you're going to follow my work, you're going to follow somebody else's, or hopefully your own, because that's the most important part to actually do. And I told everyone for, I don't know, 25, 30 years, if you get lucky enough to figure out 2 or 3 things that work, and they work really well, then do those things. That's the guy you're talking to right now. I figured out about 3 things that work really, really well. I put them into logic and I follow them. And that's why when I talk about the database and all that, I have just a perspective that you can't get from looking at an S&P chart. It's not going to happen. So something else I talked about on last night's videos, we saw one last thing on the database, and then I'm done. And then we're gonna start digging into some individual stocks and going through some stuff, because I always like to go get an opportunity to do a little bit of a sermon on a lot of theory, a lot of things that I think are important to understand from the standpoint of becoming, having those things attributes I just talked about. And I don't know if anybody know, if it used to be they changed the definition of discipline, but my definition of discipline, I always ask people, hey, are you a disciplined trader? And they're like, oh yeah. And usually I'll ask them to tell me about their entry and exit, and at some stage it gets a little fluffy and a little subjective. But the term discipline means to become submissive to a state of order or a set of rules to bring out bring about a desired result. And if you don't have a set of rules, you don't have a state of order, you can't be disciplined. You're just subjective. And that's when things get scary. And the world that we live in right now with volatility, all the opportunities are out there is pretty, it's I don't know, we won't call it scary, but it's very treacherous. And it's easy to get chewed up out there. And I've told you guys over the last several weeks that all the easy money in this market is over. It's done. Yeah, it was easy. March 23rd, 25th, April, stocks were down. You only had to ask one question. Are these guys going out of business? No. Is the Fed pumping money? Yes. Buy, right? It was easy. And our models picked up, like I said, I think it was about 12 or 13,000 of the, we got up to 90% long on our database, on our short-term data. And they killed it. It was amazing. But everybody should have. It was an easy trade in hindsight. So, all right, let's go to crude oil since it's in the limelight right now. We're looking at not even up 0.86. I don't think Lebanon's a real big deal. I don't know if you folks saw some of the video from that explosion, but it was like there's a plume of smoke, and then there was like, I mean, it looked like a serious bomb came out. I didn't see anything coming through the air, but it looked like something big went off there. I have no idea. I haven't seen any reports at all. So we're looking at WTI and but yeah, that was pretty bizarre. I don't know if anybody heard any news out there. If you have, maybe put some on the timeline, it'd be kind of interesting while we're locked into this show. But anyway, this is weekly. Let me go to a daily chart here. And I talked about this. I've covered crude in a lot of detail over the past several months, and this is that same pattern. I just, if you just came in and trying to figure out what we're talking about here, I just want to put up these PPMs. This is the same thing I keep telling you folks about, and this happens all the time. And this is when you have a state of order, set of rules, and you understand the markets. I'm an old dog, been doing the same thing. I've been using these indicators that you're looking at since 1984. I haven't looked at an RSI since 1982. I don't do 0 to 100 meters. I don't use stochastics. I don't look at oversold, overbought. I know markets get oversold and overbought. I don't look for those type of conditions for trades. I do not look at what other people are doing, trying to figure out what I should do, such as, there's a lot of folks that look at, unusual activity and insider trading and all that stuff. Don't need it. This stuff is enough if you are willing, if you have a good process. But I want to point out again here on crude, these same patterns I talked about: peak and momentum, downslope, maintenance. This is what a trend looks like from these indicators. So they don't get overbought, oversold. They measure the output or the amount of momentum that it was going. Yeah, I would say, Brett, I'd say that was fireworks. All right, I saw a couple of videos. You wouldn't want to be within 5 miles of that thing, or so. But look at the trend here. So this is the classic creepy crawler trend, and not only is this scale is kind of hard to look at, but I just want to keep it up here for a minute. I'll blow up the scale a little bit, but we're trading right within the market grid, right within those Fibonacci volatility structure, all the way up, and it just keeps climbing up. I've been talking about this for weeks and weeks now. I still expect to see this thing, and we're going to go to a weekly chart here in a minute. Still expect to see crude climb toward the 200-day moving average. It's 56 bucks right now. This is nearest futures contract. It's 56, and you know we're going to continue to climb in this range. And this is the view of the world from a daily viewpoint. When we go to a weekly, you'll see just a little bit different pattern. That same pattern. And what you're going to see here is 55 bucks is the 40-week moving average. And it seems like I talk about this every week when I do these live streams. What we're seeing here is the same formation on these PPMs on just about everything. And the interesting part about this is, and I've talked about this before, back in I actually lived and traded and made money on the 1987 crash. My son Jason's on here. He will remember the nice black 930 turbo Porsche that I bought. I would call it my crash mobile, and my sales assistants and girls that work for me call it the Batmobile. And that Batmobile came from the 87 crash. And that was a special moment in time. And same techniques that I'm telling you about now, we were able to determine Wednesday before the crash that markets were rolling over. I didn't predict a crash, but we participated in a crash because we had the right trades on, and that's how it works. The old saying that you used to go around on a trading floor in my trading floor days is I'd rather be lucky than smart any day. So, you know, listen, I'm a huge fan of Ray Dalio, but I love Ray Dalio's work from his performance standpoint. I figured out I don't like Ray Dalio. I hate to troll the guy. I mean, he's a brilliant guy, but I just hate his public persona, how he talks down to us little people and what us little people should do. And I find it really frustrating. But this pattern on crude oil, this is what I want to talk about, is we're doing the same thing that we did on these other charts. You get this spike in anything that's participated in this V bottom looks just like this from the PPM viewpoint. I know that the only time you're going to see PPMs right now are on my channel and when I do these live streams. I'm going to change that soon. Trust me, we're working on a bunch of stuff in the background to try to get these indicators out, because once you learn how to use and read these things, they kill. That's all I can tell you. And so all of this stuff that we're seeing here is that expansion of trends. This is weekly now, so intermediate trend. And there is the price and this 40-week moving average are going to meet at some stage. Now, the 40-week moving average is dropping at 1.34% per week. It is starting to flatten out a little bit. It's losing some of its downward momentum, but that's going to be substantial resistance, somewhere between 50, I'm going to guess $52 and $55 that crude oil will continue to go through. And the only thing, so I do sometimes what I call two things. I do reverse fundamentals. So if the market is, the technicals are telling me we're going to $52, what do the fundamentals have to be for that to occur? And there's only one answer there. They're going to be flying more airplanes, we're going to be driving more cars, and the economy is going to continue to come back. My best estimate, and this is my best guesstimate, is that the economy is probably running, if we're lucky, overall maybe 40%. If we're lucky, 40%. The Fed, the PPP, all of the money that's being thrown out there at people, that's keeping the economy afloat. There probably isn't an economy, and I can't argue with those guys that are saying that we're in a depression right now and all that stuff, but they've softened that. And as I said in the last week's live stream, the bottom end of the economy, bottom end meaning the unskilled workers, hospitality we know are blowing up. You've got cruise lines, all of that kind of stuff. There's nobody working on that. And these are big industries. In hospitality, you go from restaurants to hotels. You got all these people that are maids and willing to go and make beds and stuff. Some of them hated their job, but most of them were glad to be there. We've all stayed in hotels, and most of the people I run in the hallway are really nice. I know they're told to be nice. I get it. But I think they're glad to have a job, and now those people don't have a job. So there's this dislocation of capital, dislocation of people, and the unfortunate part is that those people I just mentioned, they're probably getting nothing right now, right? Whether they're illegal or whatever, they're not getting anything. So there's some really tough things going on in the economy, but they're being plugged. But what this tells us is that we're going to keep coming back, whether it's a vaccine or whether it's just people just saying, screw it, I guess we're going to die, let's just go have fun. I have no idea. At some stage, humans will be humans. And so this tells me, sorry to go into this little rant, but this tells me that we are going to move back toward this line, which is going to be substantial resistance at 52, 55. The only way it gets there is people got to buy oil. Is there going to be a war because of this thing in Beirut? I have no idea, right? I doubt it. I don't know what it was about, who did it, if it was an accident. I don't know if anyone's heard anything about that part. So it's getting I think it's getting fairly late in the evening there now. So I'm not sure when all that stuff happened. But anyway, but this same scenario I've been talking to you about on these PPMs, price pressure momentum indicators, you get the boost in the momentum, and then you get the downslope, which we've already started here, and then we'll see the same thing over here, and then you'll get a sideways maintenance, which tells us we have a trend, and this will continue. All right, let's go to gold. Let's get to some of this stuff here, and then we're real close to just opening it up and going through some stocks here. So gold is, on a weekly basis, is screaming, no doubt. We're trading up, bringing up the market grid here. Market grid is the upper end. R2 is 2020. We've traded above that. R3, 2039. We haven't quite made it there yet. And the extreme is 2055. I guess we could get there. I don't know what comes out of this whole scenario. But it's definitely in a big uptrend. I follow Jim Rickards on Twitter, and boy, he's been talking about buying gold so long. Probably him and Peter Schiff, right? They just probably wake up so giddy in the morning, like it's finally going up after talking about it for 10 years. And but there is some serious things going on with gold. I've been a gold bull for about a year and a half, maybe closer to 2 years now. But if we go over and look at the monthly graph, it gets more dramatic. Right now, what we're looking at for this month, the projections for this month, R1 is 2021, so we already hit an R1 monthly. R2 is 2061, 2100, R3, and then RXT is 2136. So we could continue to move higher. PPMs are not even, they're so strong, it's incredible, which that tells us that the likelihood of this trend lasting for a long time, it's not gonna fade. So this is something that's going to be in place for a while. I'm going to put up Fibonacci projections here. I have a customized tool that will look at patterns, and let's just see if there's nothing out there right now, but I want to go to weekly because I think there was something here that was interesting. Yeah, so I talked about this a couple of weeks ago, actually, that the high target was 2011. That's the minimum. And this target was generated on July 3rd when the price was at 1809. The projections was for a move to 2011 as to 2134 with an extreme of 2210. The market grid is, as I just reviewed, for at least for this week, is looking at 2039 maybe will be an extreme since we got this breakout. We'll have to see how this thing goes. I had talked a fair amount on the last couple videos that I thought we would stay in a sideways range in gold. Well, this Beirut thing changed everything. But in general, what I expected to see a number of days, we'll go to the daily graph here, a number of days in a sideways pattern, and then we would see much higher prices going to these projections that we're talking about. So we've exceeded projection 1, 2011. Next target, and typically it'll hit that middle target, so 2134 would be a really good target for gold. And I guess we could put up GLD just if you're doing. Let's see what the same targets were on GLD. So GLD back on 7/3 was projecting 185 men. We've actually taken that out. We're 188 right now. High targets 196,203 on GLD, and same configuration as far as the PPMs go, all that kind of stuff. Okay. Let's see. We got gold. Let's do silver, and then we're going in for just, give me some. We'll start going through individual stocks. I see people are starting to put some things up there, and Jay, I know you're listening. If you can find some stuff, maybe you can put on a post in case the timeline's moving pretty quick. I'm going to lose some of these. So looking at silver, I'm going to back up a little bit, actually. I want to go back to gold because I didn't show you the daily gold. Then we'll go to silver. Okay. So on daily gold, going back, let me get over here. On 720, the Fibonacci projection was for a move to 1986, 2050, 2089. So we're coming into this daily pattern. Now, those of you who watch the channel for a while, you'll know that this market grid, which is the yellow and red line, and there's some dots in between, these are important. If we close above the RXT number, which is 2020 today, if we close above that, that will be actually a trigger for a short-term 2 to 3 day sideways range where we'll fall back into range. But PPMs, we'll talk PPMs. PPMs are screaming. A plus 0.80, anything over 0.25 is an uptrend on PPM 1, PPM 2, 0.53, PPM 3, 0.38. So all of these, this trend, I'm not telling you something you don't already know, but this trend is very strong, and these numbers are telling us that there's substantial support right now. The major support I mentioned in last night's video is 1960, I believe 66 to 1959, and there's not a chance, there's zero chance of declining below that level. And of course, we're 80 bucks from there, so we're not even going to get close to those levels. But those levels are changing every day along with as prices continue to remain up here. But if we do close above that 2020 today, that's going to be a little bit of a potential backfilling. But listen, when we get an international event like what we're having, I don't know what this thing is in Beirut. I haven't seen anybody comment on it. I'm obviously doing this, so I really can't go out and look at news and try to figure out what's going on. But this could be something that would propel, and this type of analysis, when you get in there, you just have a strong uptrend. This possibly the pattern that we've seen unfold over the last 5 or 6 days could have ended up to be a wave 4, and we're going into wave 5, and that would project prices a minimum to these levels here. Most likely, we'd have to go back to the weekly projections I talked about to get in the right place. Now, silver. Silver's doing a similar thing here. I will show you something here. I think I can zoom in on this. Bear with me. Okay. I'm going to draw in something. This is that market grid trigger that I've talked to you about. I'll show it to you right here. This day right here, we closed over that yellow line, which is the RXT line. And if you notice, we got 1, 2 days. Typically, it'll go back down to the bottom of the grid. And then we got another close above it right here. And then we got basically a sideways. We got 1, 2, 3 days, and then we started back up again. Now we're getting another trigger potential on silver for it to come back into that range. And so, but meanwhile, just going to the trends here, going back to a little bigger picture here, you got PPMs just off the map, plus 1.96. That's what? Eight times the normal trend. It's very strong. You got PPMs all trending up. The 10-period moving average right now, the 10-day moving average, 24.02. Today's low, 24.22. So obvious this news has jacked the metals pretty good, this event in Beirut. So you're seeing this thing get back up. Depending on what comes out of this, it might be that maybe it's a one breakout and we go right back into range based on this trigger. Let's look at the weekly grid. Let me bring this up so you can see this a little better. R3 is 2641 right now. The high 2685. This is for the week, for this week. Extreme 2709. So we're printing up at the extreme projected for the week. There's also some Fibonacci numbers here that came out when on 7/17. There were 3 high target Fibonacci's, 2430, 2716, 2864. So that next target number would be 2716. We're pretty darn close to that. Wouldn't take much to get up there. We're seeing another 6+% move on silver today. Going to monthly, and then we're going from here, we're going to go to start looking at individual stocks after this coverage here. So monthly grid, we're looking at 2655 is R2 for the month of August. R3 2775, RXT, which is the extreme, 28.85. So there's still some upside for this month. Once again, PPMs are just insanely powerful. These are big trends. And if we look back, let me take this off screen. We look back at some of these, it's very likely that there's a couple places here that are going to be challenged. Probably $34 and the all-time high that I have on, this is a nearest futures chart going back on 2011, we printed 51.26. I would suspect this is going to be an elongated trend similar to what we had back from '09. And we went from down at the low over here, we went from 13 bucks to 51, and that was from '09 to 11. So we're looking at a multi-year trend that's likely to happen here. If you weren't watching earlier in the show, I made a comment. The longer the prediction or the projection into the future, the more likely you will be wrong. I'm pretty darn good at the next 2 or 3 days. I'm good at next maybe 3 or 4 weeks or 8 weeks. When you start to get beyond the spectrum going into months, the accuracy goes down. That's why folks day trade. You can be right for 3 minutes. So this is the point. It gets harder to make these longer term projections, but from the standpoint of what is happening out there in this market, I will tell you that we're going to most likely see a move to 34. That's going to be a first level, and then ultimately a retest of the highs would appear to be likely. And this metals market has been setting up. You're looking at a trend here. This sideways bottoming pattern has been huge here from the standpoint of building a base, right? So I'm just drawing a line through here. This green line that I just put in here, long-term base, and the catapult. I've actually got Fibonacci projections. There's nothing coming out of this pattern just yet, but I expect we will see some substantial projections to the upside. All right. All right, folks, let's do this. Let's go over to a daily, and we'll start looking. I know it's gonna come up, so I'm just gonna put Tesla up here. We're doing Tesla right now. Then I'll go to some of the stuff that's on there. So you Tesla folks are gonna love this. I'm going to show you the Fibonacci projections up here. Tesla, high target 1, 2118, 2405, 2583. I don't know, maybe far-fetched, but maybe not, because this pattern is set up as it's possible that this is a very large, and we'll go to, this is a daily graph, so we'll go through this really quick here. So this pattern is, what's happening here is it's being projected up to these numbers off of this larger pattern. And that's where these 21, 24 numbers are coming out at. And what you're seeing here, though, is we're still in this corrective phase as the PPMs are diving off here. So this is a short-term chart. This goes in line with what I'm talking about on our database. So you've been watching for the last hour and 15 minutes when I was going through the database. This is what we're seeing on a lot of stocks where we're just going into this drifting sideways. We're off the highs and we're just consolidating and with a slight bias to the downside. There are literally thousands of stocks doing this at the moment. And as I said earlier, some people think 5 stocks are driving the market. They're not. Right now, we still have over 10,000 symbols still in a trend mode on a daily. But I think that's going to cut back quite a bit. But this is the short-term projections. Let's go to the next level and look at the weekly. Now this is where this gets a little more interesting. So you look at that really short term, you look at the patterns there, and it's pretty exciting from the technical formation. Now we go to maybe more to reality, but these PPMs are formed just like the things that I've been talking about for a while here, is that all the PPMs, especially in stocks that look like this, that have rallied off the lows in March so hard, they have the same configuration. This one is much more bullish, but the support is this 10-week moving average. It's going up about 120 bucks a week. It's at 12.35. It'll be 13.14. It'll be right where we are right now. In 2 weeks' time, that 10-period moving average is going to be right there. And this flag that's setting up will likely continue to form some weeks after that. And I know folks question what I said was going to happen on Tesla several weeks ago, and it's exactly what's happened. As we spiked up to the top end of this range, and now we're locked into this pattern here, which is a let me draw this in. And I've talked about this a lot. I believe we're gonna set up some kind of zigzag, some kind of formation up here in this market grid. And there's a lot of weeks, probably the same thing that I've been talking about, is that at least another 8+ bars is a weekly, so another 4-8 weeks of consolidation. And this will go across on a lot of stuff. And and I will go to AMD, and I have the computers I'm on, man, these are custom built box for trading. And I talked to the folks that do this stuff, and I asked if they would be willing to give us a deal. And I'm actually working on a deal, because I don't let anyone, I've used their computers for 10 years. And I was talking to one of the owners of this business yesterday, and he was telling me that the Ryzen chips are so far ahead of of Intel, it's not even funny. They've just blown it up. And Intel's got their issues. And I remember I was on the Pacific Options Exchange in early 90s, and at that time AMD was trying to become a player. They were out there, but every time they would come up with a new chip, Intel would sue them. And you could trade AMD stock. It would go from $10 roughly to about $22, $24. And what would happen is Intel would sue them. It would drop to $10. So you could just go in there, and I was in the options, playing options on the Pacific Options Exchange. And you could just go and put all the strategies out for AMD to start to trade back to 24. And what would happen is there'd be a lawsuit, it'd be pending. And then one day it'd come out, oh, they've dropped it, or AMD won the lawsuit and the infringement wasn't there. Stock would pop back to 24. You put strategies on, play it back to 10. And it was always the same. So guess what? And they were trying to sue them. This is a Microsoft strategy. This is the big dogs in any industry will go after somebody when they start to do something to knock them down and try to put them out of business by spending attorneys. If anybody has an ex-wife, you know that's what they do too, right? But the bottom line is what happens is they finally, they're the winners, and we'll go through AMD and all that right now. I think we've covered this pretty good on Tesla, but you guys get it. So let's start with Intel. And I did discuss this this is a weekly, I did discuss this last week. We were trading down to that 200-week moving average, and we're holding that, and I think that's probably the worst of the sell-off. The last time we went down to 200-week, you can see that was in the initial sell-off. We rallied back up and then back to the 200-week again, and there's going to be some stability. The company's still worth money. They're not going out of business, but for sure, the AMD folks have just kicked their butts big time, right? Yeah, and I get the AMD IO, but I'll tell you, they are actually pretty good. So let's do this. Let's go to a daily just to see if there's any patterns here that might be worth playing. Yeah, you get this weird little bottom here. PPMs are still, there's a lot of work to do before this stock's going to rally. If it goes, if you're using the WaveTech tool, then you can definitely pick this up. This would be a good one. Put a 1.2 model on WaveTech, and that would be probably a really good place to go. So I'm going to put this up. I'm going to do an advertisement, because if you want to catch these trades, if you go in, you can sign up. You can go to the kendallreport.com/WaveTech and sign up for this thing. But a lot of these, when you get stocks that have cratered out like this, and this was something we're talking about back in March, this thing will find this. So, you know, mark this down. If you go to this place, there's a video there. There's a page that tells you about what this product does. And I know there's a lot of you have already signed up for this thing, and it will catch that next Intel trade. Because I'm not going to be on here, and I don't think I'll ever cover the individual trades, individual stocks on my nightly videos. If I start that, then I'm in big trouble. I would love to do it. I wish there were 2 or 3 of me and there was a way to generate this stuff, but these live streams are the best way to go on this. So there's Intel, not on the bottom on a daily yet, but that should bounce off that 200-week moving average, and the way to find this is a 1.2 model off of the WaveTech tool. There's probably a pretty good trade back to the underside of the 200-day moving average, which is up at, let's see where that is. That's at 58.47. So there's a decent trade, but you could take a stab here, and maybe this is the low. But I would rather wait for the pattern to set up a little more, and that's what that WaveTech tool is going to do. All right, let's go to AMD. Let's just look at these two since we've gotten down this trail. Yeah, a little different formation, huh? And AMD's is blowing up today, up 765. Also about to trigger a market grid signal, which would tell us that we're going to fall back into the range. But this momentum here is just insane. And I'm going to put up a model here just to see what. Now the models that I put up here on TradeStation are the same models in WaveTech, by the way. So the last trade on 3-2 was right here at 57.46 on 720 is where it bought this stock. I'd have to say if I own this stock right now, I'd probably be taking partial profits, selling something out. Back in the floor trading days, we used to call it like tricking the market gods. Let them make them think that you're getting out, so the market would go higher. And I throw these things out at you folks once in a while, but I always say never celebrate a trade. If you feel really, really good and you're calling up a buddy or you're talking to somebody and go, man, this thing's really doing well, you better be selling something. I came up with an interesting term talking to a friend the other day, and it was called celebrate, only S-E-L-L, ibrate, right? Celebrate. So if you're celebrating, you better be selling. And at least taking some taking some chips off the table for sure. But yeah, this is a big trend, and it makes sense. I had no idea. I keep seeing all these Ryzen chips, and I've always been kind of AMD. You got anything with an Intel? But yeah, so anyway, it's pretty good. That's funny. That was my old nickname in the institutional days. I used to run a service called the Daily Quant Fixed Income Report, and they called me the Quant Man. The guys at First Boston in London were always called me the Quant Man. That's pretty funny. Somebody called me that. That's awesome. I guess I lived that. Anyway, so AMD, let's go weekly. Let's see if there's anything out there on that. Yeah, just an insane. Over here on a weekly, the intermediate model, which this trade is also in the WaveTech tool, is at 52.34 is where it bought the last buy there. There's some noise in this thing, but boy, what a rocket ship. The grid, we're very close. The high today, 85.81. R3, 85.87. So we're printing right at an R3 right now. So it's very possible. You can look at these market grids going back, and we don't trade above these ranges very often. So from a weekly standpoint, this is getting pretty frothy up here. And that's why I say if I did own a bunch of this stuff, I'd be selling those. And Eric, I would look at all those models, 1, 2 daily, weekly, and just look at the overall attributes of all those things as far as using the tool. I mean, pretty insane volume. If you look here, 173 million shares right now. That's up volume. Yeah, so that's big stuff, right? So definitely climactic. I have a funny way of looking at volume. Some people look at volume that, oh, there's a lot of volume, so that's good. I look at volume as climactic, especially I don't have volume up here on the page. But I would definitely, like I said, that was my recommendation. If you have some of this, take some off. The best feeling in the world is letting part of a trade go and it keeps going higher. That's a good thing, trust me. You want to just keep selling on the way up, and ultimately you don't want to own it anymore. And if you're lucky enough to get to the, for this thing to keep going up, it's crazy. I told this story back Qualcomm back in 2000. We actually got to buy it. I think it was in '99. We got to buy it $35 on Qualcomm, and our average out price was, I think, $740 or $780 a share. And I related that to when we talked about Tesla several weeks ago, is that I feel like we got, when you get to that mode, every price level is a bubble. That's all you hear. And as long as you're hearing that kind of talk, then it's going higher. Okay, there's a lot of bubble talk I got an email from an old client last night, and they're talking about some guy that says the S&P is going to like 700 or 400 by 22. And it goes to what I was talking to you folks a little while ago. The longer the projection, and actually I'll add an element to that, and the more dramatic that you're calling, the more likely you'll be wrong. I mean, look at guys like Harry Dent, Peter Schiff. I mean, look at these guys, man. They just keep talking whatever they're talking about these long-term projections, and they're just wrong forever. It's amazing they're still selling newsletters. It always fascinates me because they have really good marketing people. But the bottom line is, the bottom line is this is big. And I see somebody just commented that the Bank of America is saying AMD could be a 100 billion chip. Bank of America is Merrill Lynch. I'm an ex-Merrill Lynch guy, ex-Merrill Lynch research. Worked in Merrill Lynch research for a while, and they're usually wrong. I hate to say it, but they might be right. But you know, there's definitely AMD is killing it, man. And I'm actually anxious. I'm looking at this chip that has 64 threads that I want. The chip. One chip, so this is probably why the stock is flying, is this one chip I looked at is a $3,500 upgrade on this computer. $3,500, one chip. It's got, I think, 64 cores, 128 threads, something ridiculous. And the speeds, it's crazy. Yeah, you're probably right, Phil. Yeah, you don't need good marketing if you're peddling fear. You're absolutely right, and you know, boy, I could go on about a lot of stuff here on things that I've seen. Yeah, Merrill Lynch equals Kramer. Yeah, exactly. You know, I always thought that Jim Cramer was a pretty annoying guy, but he's actually gotten more annoying. How is that possible? I don't know how that's possible. But he indeed has gotten to be very annoying. Yeah, that's the one that Brett, oh, wow. That's what I want is the AMD Threadripper. The Threadripper, that is exactly what I want. That thing is insanity. I know it. I got to have it. It's like a Ferrari, right? You want it. Yeah. So, and think about it, folks. This is an interesting little side note here, and this is something that we see a lot. I mean, think about what sells on the internet right now. Think about all the videos. I see a bunch of these guys out there. You know, they're peddling the next crash. Market's going to crash. Market's going to crash. You better do something now. That stuff sells. It's always sold. It's just the way it is. I will have to tell you that I wouldn't be talking to you folks today. There was an old group of players, and some of them are still around. Jim Dines. I don't know if you folks been around long enough to even know who he is, but they used to have this group called MCMR, something like Monetary Committee for something Reform. I don't know if it was, maybe I forget the exact acronym, but there were a bunch of little guys that were writing newsletters back in those days. And there was a guy called the Reaper. How good is that for the fear guy, right? And because of the Reaper, in early 1979, I bought silver, and he was saying that silver was going to go to $50. Well, silver was, I don't know, like $3 then, right? And I went with a buddy and went up to Chicago and opened up an account. That was the first time I walked on the trading floor. That's a whole nother story. I won't go there right now. And I opened up an account and I bought silver. And this stuff started going up, and I made a bunch of money. I thought it's sort of like maybe a lot of folks think that investing is easy right now because the you know, I bought something and went up and made a bunch of money. Well, they took all that money back and then some, but that's okay. That was a good thing for me. But the whole I guess the whole reason I'm telling you this is it hadn't been for that newsletter and me going to the floor, I fell in love. I went to the Chicago Board of Trade and walked on the floor and I was like, this is me. I got to do this. I'm not even sure what these guys are doing, but this has got to be me. And that was 1979, and I'm still here and still loving this stuff even more, I think, than I ever have. So, you know, this is an amazing world to live in, and I love what's happening out here, guys. Guys and gals, I know that is that we all have opportunities because of this digital world we live in that never happened before. I saw a comment on our channel the other day that said something about if it wasn't for the markets, he'd have no way of making money or a living right now. And that's true for a lot of people, and which is amazing, amazing stuff. But the Reaper was a total fear letter. And Jimmy Dines, and I saw that he's still around. He's always been a crazy good writer and very convincing. And, you know, so anyway, so I'm sorry to go down that segment, but this whole thing, these AMD stories, these things that are happening, this is a huge, huge, huge event for AMD, and I'm happy for them because I used to trade in that pit, 1992, and as I told you, you know, you could buy the stock at 10 and sell at 24, and every time they started doing good, Intel sued them, and now they got those boys on the rope, man, and I love it. I absolutely love it. So I'm becoming an AMD fan all of a sudden, bigger than I thought, just because of conversations I had yesterday with the guys that build my computers and all that stuff. So let's get out of this and we'll go to WFC, which has got to be. This is probably the worst bank that's ever been built. I used to love this. My brother and I were talking about this the other day, how much we used to love Wells. I lived in California for a lot of years, and, you know, this thing is at least starting to show signs of a bottom. If they just start doing sleazy deals, they might be able to get out of here. I heard a really interesting story about these guys. I won't go down another story routine, but this is a decent looking pattern, but there's a lot of resistance at the 40-week moving average, 37.40. Once again, I hate to tout our tool, but Waytech's going to figure this one out, you know. And just so you know, as if you ask me what I think, I'm going to give you some general views, but ultimately, I'm going to put up the models on the screen and see what they're doing. Yeah. Yeah, I see a comment here, and what's my opinion of the gold cross in history? I don't look at those kind of crossovers. Crossovers are fine. There was, I've been around this stuff a long time, folks, and going back in the 70s, there was a guy named Dick Donchin, and he made a ton of money on, I think it was a 20-day and 40-day moving average crossover and just buying and selling off of that. And there was another group, Fabian, used to do a newsletter back, I think, back to the 50s. And these guys, all they did was a 200-day moving average, not even crossover, just above or below, and that was bull bear. And they sold that newsletter and made a lot of money off of that. And, you know, and there is some merit to some of this stuff. So a lot of these classic patterns, you folks need to know, I live in a bubble. I live in my own world of my own technical stuff, so I don't look at a lot of those kind of things. But I will tell you on the gold cross situation. What I talked about earlier in the S&P on the replay, you'll be able to see it. I don't know. I should have you guys, track some of the things when I'm going through these stocks so we could put some things on a timeline as I just go through all this random stuff. But yeah, anyway, this Wells stock is bottoming, trying to bottom. Let's go to a daily, just see what that looks like. All right, let's do this. I'm gonna go daily. I'm gonna put WFC. I'm just gonna bring up wave text to see what's out here. Okay, so on a daily 3-2 right now, we got a buy, but it's not working. It's underwater by 7%. I would this is a 1.2. I would go with probably a 3-2 model on this, just because this is one of these crater jobs that, yeah, this is a tough one to trade. So the next 3-2 buy, if you're using WaveTech, the next 3-2 buy, if you want to play this stock, I don't think it's a good one to play. We used to have a saying on the trading floor days on PCOS, which is Pacific Options. We used to say, never hang around trouble. There's too many good stocks. Go find a different stock. Yeah, okay. Awesome, Jay. I'm glad you're doing that. So we got crude oil at 55 minutes in, gold 105. Yeah, and Intel is 10 times bigger than AMD. So maybe not for long. They're definitely taking market share, which is exciting, especially coming from where I came from. So, okay, let's keep moving along here. Yeah, I got to do Apple, right? I saw one of the funniest things on Twitter the other day. I was just cracking up. I don't think I have it on this computer. It's on my phone. But it's interesting that, Apple has rallied up in this 4-for-1 split. And they had a picture of this girl, and they said $1, and she's kind of got a frown on her face. And then they said 4 quarters, and she got all excited about having 4 quarters versus $1. So, I don't see this stock split being that big a deal. I saw a funny story. We were trolling Jim Cramer a little bit ago, and Cramer says now they're like the company of the people because they have $100 stock. None of that stuff matters anymore. You have fractional shares. You can buy Apple with $10 now, so you don't need $100 split stock. You don't need that. And those are kind of old school games. The split now because of fractional shares, and there's some things I'm going to be talking about you folks in future live streams and things that we plan on doing about fractional shares. I'm going to be introducing you folks to something called direct dynamic indexing. We're working on some tools to automate some trading, and that will be that's going to be really exciting. I'm chomping at the bit right now. Yeah, and it is a gimmick, absolutely. Matter of fact, a reverse split, Jason Burt, a reverse split, it says run for your life. Actually, you're already dead when that happens. All right, let's do Microsoft. Microsoft's selling off a little bit. This is the daily. None of the PPMs here are in a good place, and this stock is probably going to be going sideways. I know there was a lot of stuff going on about the administration trying to stop the TikTok deal. I don't think the TikTok deal is even material, is it? I mean, it's somewhat of a joke. And so we did have on Microsoft, though, you see dots here, these are cycle events. And I look at cycle clusters, and the clusters are significant. There was one over here, and then we had the next cluster event here, and so far, but this stock, the momentum's just not there. Let's go look at the weekly. Yeah, weekly, once again, these stocks, and I've been talking about this the entire show, the stocks that are out there are actually, that look like this, that participated in the V bottom, all have this same formation on the PPMs, where we have a very strong PPM1. This is 1.43, PPM2 1.38, and 0.99. So the fact that this thing looks sloppy on a daily basis, there's still the underlying trends in Microsoft are firmly up and are not going away. All right. What else we got here, folks? So we're doing IMUX. Ouch. Yeah, this thing, yeah. Now let me go to this. This is a terrible chart. Let me just look here. There we go. It's a little better coming off this low. Let's put a model on it. Let's go with 3.2. Yeah, last 3.2 buy here at 11.75, so that was a good one. Here's one of those triggers. If you've been watching this show for a little bit, this is one of those market grid triggers that I talk about all the time. And let's take a look at this real quick. I just want to draw this out. Right here, we gapped and closed above that. Look at the next session, down, and we should get at least 3. And I mentioned that it usually goes down to the bottom end of the market grid. We've done that. We're going to see at least a couple more days down, and with these sharp roll over here on the PPMs, all 3 at the same time, that's somewhat of a terminal event. Terminal meaning that as far as that expansion of that uptrend goes is pretty much over on that. Okay. But the weekly chart is worthless after it cratered out. But there's some decent trades here. Once again, all of these trades are on the wave tech tool. Let's go. Someone asked about the Dow Jones. I usually don't cover the Dow. Really pretty flatlined here. It's been a laggard from that standpoint. And there's something I'll bring up after this. And we got what, 12:15 local time. Yeah, there's not a lot here. I could take some of this crud off here. Let's just go to weekly. If we're going to see anything, it's going to be here. Weekly patterns, definitely the weakest of the indexes, but it probably has the most stocks that are, I mean, it's a small index, right? So there's only 30 stocks, so it's going to be affected. But the patterns are similar. I've said this over and over. PPM1, 0.53, PPM2 is expanding. So overall, this is still telling us, same with all these indexes, that we're looking at this pattern ultimately to continue to move higher. I mentioned when I was covering the S&P earlier that there's at least at least a 60% probability that we're going to see a test of the highs and probably make a new high. And I suspect this index will be the same. It's just not going to be right now. It may not be until first of next year when some of these things happen. Yeah, we should definitely do a couple things here. I'm just looking at. Let's go to the NASDAQ futures real quick while we're on indices. And we're seeing some weakness here. You know, I think all of these indexes are going to struggle at these levels, and that's, you know, on Monday's video I talked about this sloppy week coming, and you know the fact that we made new highs. You know, sloppy doesn't mean that we can't trade higher. We're just not going to see a lot of the follow through on these major indexes right now. All right. As far as the market grid goes here for the NASDAQ, I talked about this in last night's video, but I'll cover it briefly, is on a weekly basis, we're looking at R1 was 11,047, R2 11,223, so we could see a move up there, but I think we're probably going to see at least an S1 number be reached, which is 10,733. I've talked about it. I talked a lot about the 1,300 earnings reports that are coming out this week. Those are definitely going to keep, I believe, market sentiment in check in spite of employment claims on Thursday, whatever they come out. I think they're expected to show 1.4 million more claims. The continuing claims are what's going to be important there. And as far as the unemployment numbers going, you know, we're talking 10.5. Maybe they can pull a rabbit out of the hat and pull us under 10%. Books are probably being cooked anyway. Who knows what's real? And we'll just have to see. But from an index standpoint, I think we're going to remain in this range, and this range allows for a new high yet for this week. So we definitely could see a new high from that standpoint. All right, I'm just grabbing it at stuff here. We're going to go to Zoom, and these guys haven't been around a lot, but we'll take a look at these. Similar type pattern where we're locked in a range. There's not a lot of data. In fact, let's go over here. Let's go to our tool. We have better. I thought it was in the database. Oh, it's ZM. That might help. Bear with me one second, folks. I'm going to bring something in from my other screen here real quick. All right. So I am going to bring in our portfolio expert software, and you'll see that over here on 131 in January, this is interesting actually. On January, we got a buy on Zoom. That's very, very interesting that we got a buy on Zoom. Let me do something else here. Let me put it over here. I'm trying to find a right page here that's going to give me a little better view of this stuff. Yeah, so let's look at a couple things here. This is kind of an interesting comparison that I have on the screen here. Is the green line is Zoom, the blue line down at the bottom is the S&P. So we're up 290% on that. That's somewhat interesting. But going back to the symbol graph, we did get that buy on, actually on 131 is the buy signal on that. Yeah, it's just got some support numbers. I'm just looking around here. Yeah, there's not a lot of, since this is a new stock, there's not a lot of stats on this. Usually we have a lot of history on this. There's just not a lot here, so we can just look. There's only 2 trades that have happened. There was a trade that on 4/26 of 19, then it sold out at on 9/6, and then it bought in. But this buy was interesting that it was able to pick this up before everybody was working out of their home. That's kind of interesting. Anyway, so but yeah, so once again, let's see what it looks like. Let me go to a daily model here. Yeah, daily's got a little more chop in there. A lot of buys and sells in here. It's a little too noisy. Let me go in here and just grab it on daily 1-2. Yeah, this is going to be a better model. So the last trade, if you even, this is the same trades that are in the WaveTech tool. There was a buy here on, let's see here. Let me bring up this. This might be a little small for you to read, but there was a buy. There was a buy on 5/12 at 168, and it sold it at 247, so I made a 47% gain. There was a small loss, and then there was a gain. These are all short-term trades, so you can see this is what this thing's done on a short-term basis. If we go over here and go to weekly, there's right now only 1 trade, and then we're currently long from $66. So not a lot to go on right there from that standpoint. But going over to the daily chart here, there were these stopped calculating, so they're no longer valid. There were some upward objectives for it to go to a minimum of 268. I'll bring that on screen for you. 268.10. The high's been 271 so far. 279 and 287 are the upward projections. And we are seeing that on a daily basis, we're seeing the PPMs turning up. So it's trying to put in another rally. I don't know. Let's hope not. Does that mean we got another lockdown coming with all the craziness out there? We'll see. Yeah, so if we put up, KODK, right? I'm going back and forth here, but I'm going to put in KODK in That was interesting. Actually got a buy on 722 at $2.20 on Kodak. It's now up 579%. And that's, you know, if you would have been able to see this print, this crazy spike, you got to sell something like that if you did buy it. I'm not even sure why you'd have this on your radar screen and why you'd be watching this stock at all. But I guess it's possible if you were and you put it into the model, you would have picked it up at 220. And obviously some of these, this is after prices are trying to come back into reality or whatever this thing really is. Yeah, it will be interesting to see when this thing exits, Al. These kind of spikes are crazy. Usually what will happen is, that's if there's any reality in this stock at all, is that it'll pull back. You see, it's hard to see on this chart here, but see if I can blow it up. Yeah, it's not going to really work. But anyway, you can see let's go over to TradeStation and bring it up. You can see the 10-period moving average, but look at the crazy market grid on this thing. It's all over the place, and we're right now the 10-period moving average is at 1310. We traded down to 1286, so we're hitting that. PPM1 is at 10.13, so this should hold here, but then you've got a possibility of running back to 24, but it will be interesting to see how this thing gets out. Yeah, I can always count on you, Jake, for this kind of information. Kodak is a criminal enterprise and hold the largest non-bank institutional short on silver and money that they got to help them with their silver short. Yeah, it looks like they're going to get squeezed. Maybe they'll be the big buyer, right? So, all right, let's do Bitcoin. I believe the last buy on Bitcoin was 93.67 on the model. This pattern to me looks like it wants to continue higher. I talked a lot about this last week as well, and we're seeing on a weekly basis, we've had a trade on since 82.66 on the intermediate on Bitcoin. And I talked about this a fair amount, but this thing is on the verge of breaking out in a very big move and potentially going to, I believe, probably an all-time high. You know, we're probably going to see something over 20,000 at some stage here. Not going to happen overnight. But Hitman, I would say no. I wouldn't. I don't think I'd short Kodak at the moment, but I would watch it a little closer. It should bounce maybe at 24 or so, 24 to 30. You might be able to put something on there. Yeah, so Hitman, yes. Legit question for sure. When you say your model indicates a buy, yeah, we actually issued the buy the day before we enter. So we have an end-of-day process. It'll tell you to buy or sell tonight. We update our servers every night at approximately 8:30 Eastern time. We collect data. We run all the models. We run about 10,000 unique portfolios every night. Update all the stats, everything, and then it will give you it will tell you to buy or sell a signal. It does not do shorts, but what it will do is it'll tell you to exit a symbol, and then the next known data price that we can execute at is the next day's open. So everything is done on the next day open, and as far as so any trade, we tell you to buy, it's the next day open buy. When you go to the platform, you'll see the opening. You'll see the price that's in there is, and that next open is the entry or exit point on the symbol. So yes, it gives very specific trade signals on everything. Exactly when to buy and sell. There's a map, tells you expectations, all kinds of stuff. There's some pretty good videos on our channel. If you can watch the WaveTech previous live shows, there is one coming up at 4:30 Eastern time on Wednesday. You can watch and see. We go through, it's training. We do a Zoom meeting, and we actually simulcast a Zoom meeting with people that are using the software. Get the Zoom meeting link, and that will, they ask questions, and people on YouTube ask questions. We cover everything. I know, Jake, you're trying to pull me in, man. I'm not taking the bait. Anyway. All right, let's see here. So Bitcoin, I think I got that covered. So Andrea, you got to give me the exact symbol if you want something. Yeah, let's go through the 10-year. Let's definitely do that. These things have been drifting. It's like the inverse of, yeah, looking at here at the 10-year, it's like the inverse of crude oil, right? It's got that same contracting pattern. And I've been talking about this over the last several weeks. We continue just to drift very, very slowly lower. And I'm positive that at least the Fed does not want negative rates. As we get closer and closer to that, in fact, let's go, before we do this, let's go over to this page here. And I'll show you something that's happened here. This is the 13-week T-bill, 2-year, 5-year, 5-year, 10-year, and 30-year yields. And you can see how they just flatten off the 13-week T-bill. And we're just, you know, they're gonna keep this. They'll do whatever they have to, I believe, to keep this thing in a positive. But you can see how it just flattened out. And looking at just a real quick glance at the yield curve as we're talking about this. This is the 1030 spread, and I talked about this. I thought we were going to maintain where my cursor is here. I thought we would maintain a bottom in as far as the spread goes. We have one more leg down. This is a real important metric that the Fed is watching, and they want this, especially the 30-year. They want the 30 to actually go up a fair amount, and this is paramount, I think, to their strategy and what they're doing here. All of this stuff is really important. So I'll go through this through the 10-year, and then we'll go ahead and head to the we'll do the U.S. dollar, and I'll look at some of these other stocks. But back to the 10-year, what's happening, this is a weekly chart, and the PPMs are setting up a bottom. And I've been talking about this for a lot of weeks, like 2 months of weeks. And this pattern is forming into this little wedge into the market grid, and we're going to see a move above, at some point, above 0.65. If we get above 0.65, 0.68, then we're going to be able to see yields move up a little bit. And I believe that's what the Fed wants to happen. I think zero rates in this country would be the disaster beyond the disaster. I know some of you folks are, I know some of the folks who are on the timeline are in Europe right now, and I know you folks know more about zero rates than you want to know. And it's just been okay. I'm going to go to monthly here before I skip on. And monthly's still in this massive downtrend, but it will start to bottom. There's no signs of a bottom on a monthly basis yet. We're looking at, I would think, remaining above 0.5 on the 10-year. If we get below 0.5, then it's going to become more concerning from my viewpoint. I don't really have any numbers. That's just kind of a round number as far as that goes, as something to watch. But the PPMs here are just insanely negative on a monthly basis. There's very little that's going to happen. And I know last year when we were printing up here at way back in 2018, this little black line that's up here, not enough data to calculate it further back, but that's the 200-month moving average. That's exactly where we went to as far as the high in yields. That was it. Yeah, so I think these things will bottom. 0.5 is kind of a battleground. I guarantee you that the people in the New York Fed are watching this. That was a job I always wanted to work on, a Fed funds desk at New York Fed once upon a time when I was a young lad. I don't know why, I just wanted the experience, I guess, and being able to trade within the massive cash flow of the U.S. system. Yeah, Patrick, training is going to be Thursday this week. I won't be in the office tomorrow, so I'll be out. So yeah, we'll be looking at Thursday training 4:30 for WaveTech. All right. There's a couple requests here. You know, while I'm here, I'm going to go directly to the Dow. Let's take a look at. Let's do the Dow index DXY. Oops. This is a monthly, so I'm going to go over to daily. We're starting to see the first signs of a bottom. Let me take a couple things off here, clean this up real quick. So we have the 10-period moving average right above the action right now at 93.82, high 93.83 today, last 93.32. So we got up to that number and pulled back from it. But we're seeing PPM1 cut through its first derivative. That's first sign. PPM2 is ready to do the same thing. PPM3 is cut through first and second derivative. This is the beginning of a bottoming pattern. Let me get it straight. Not predicting a huge rally, not a bull market, not anything like that. The possibilities would be probably a 50% retracement back toward the 200-day moving average. Right now, 200-day is at 98 even on the Dow index. We could get back to that level. We go to the weekly. On the Dow, I'm going to show you, and I went through this comparison last night. I normally cover the Dow using the nearest futures contract. This DXY, the 200-day moving, 200-week moving average, 96.44, and we're quite a bit below that. But you're seeing PPM1 at least starting to turn up. It's still very negative, but this is going. What this is telling us that there's the downward momentum is starting to bleed off a little bit. Whether it can actually get above its first and ultimately second derivative. This is a weekly graph, so we're looking at 6-8 weeks minimum. This is not going to happen overnight. All right. See here. Oh, I'll show you that same comparison real quick here. If we go to the nearest futures contract, you'll see the 200-week moving average is much closer to the action. This has rollovers, premiums, discounts, rolling over every quarter. So there's a much different price calculation here going on than on the cash index. And so you get everything from premiums to backwardation to everything you can dream up that happens in the futures markets. And this index is also, I believe, about 35% euro-dollar weighted. So it's pretty heavy euro-dollar. Anyway, so but the same configuration on those things as far as it goes. Yeah, so somebody asked a question, and I think it's a good one, and I do want to cover it. It has to do with Apple and the exit that we got on Apple. Well, not only did we get an exit, we got a re-entry on that as well. I'll bring this up on WaveTech, but yeah, so we got an exit. We bought Apple at we bought Apple at 258 on 326, which was the fourth day after the low was made. We held it until we exited over here at the 371.38 level. And this is something, you know, we've been offering this out to, not to the public, but to institutional traders forever. And one of the things that I talk about a lot, and I'll just say this right here, is that the dots are not connected. So that is a trade that came in and got out. And every one of the trades that we put out has a profile, and this actually exceeded the profile. It almost doubled the returns and almost doubled the typical holding period that happened. So once it got out, it takes it out. That's your last trade. And the fact that the market goes to new high doesn't mean that it did anything wrong. It actually did everything right. And then when the market broke out again, it was willing to come back in. It's not emotional. And the pattern that's happening here now is this acceleration. So we got to buy. It ended up buying here. It showed. Let me look at. Let's go over here. let's put Apple in here on WaveTech. Folks, this is an old platform that we revived, and we're working on some new stuff right now that's going to be wonderful. Okay. All right, yeah, so this, you can see there's the exit, and then it gapped up, and this is the 1-2. Let's go to 3-2. I think 3-2 came in later and didn't, yeah, so 3-2 never sold out. And let me back up here. Yeah, so the best model for, if you notice this poor, fair, good, excellent bar at the top, this is at a 103.59 on 1.2, and the best model is actually 3.2. It came in a little later on the entry. It came in at 427 at 281. It's still long right now. I think the trade on 1-2 made about 47%, so this one's got 54%. Either one's a pretty good trade. Even if you got out, got in, it's about, you know, it's how to hold them and when to fold them that makes money. So you can go to, but you see now it's a 119, so it's slightly better. It's a flip of a coin. Which model's better on the daily from that standpoint? If we can do the same thing, we can go to the intermediate models on Apple. And let's go to 3-2. Yeah, the intermediate models were just lagging pretty big here. Okay, here we go. We had a terrible exit, but it re-entered. So right now it's 277 on the intermediate. This has got the 3-2 is the model. You see it's pegged over here on the E and excellent from the good. So every symbol in our database has a rating on how good the model is, not how good the stock is. But this is, you know, this is the intermediate trade that you would have on 420. And I'm going to show you something I'm not going to do. But if we go to the model results overview here, actually I want to go to trade profile. And the trade profile is the map that I talk a lot about. And the current trade duration is 74 trading days. Normally, I'll highlight this line, normally this model will hold for 266 days. It also says that the projected profit is 99.86. So what it's saying is that on average, when we get a trade on Apple on intermediate, we make 99% on the trade. It tells us the price projection is 555. And it also tells us it's under, then it's got a huge standard deviation target on it. The average loss is 19% on this model. And the interesting thing, when we go to model results, you'll see that from a model standpoint, it's right now, it's about 44% winners. And I've talked a lot about this when we do our WaveTech show. The average win is 99, the average loss is 19. The win-loss ratio is 5.18. What that means, for every dollar it loses, it makes $5.18. So that is exactly what we want to see on this type of symbol, okay? So hopefully that explained a lot of what went on with this symbol here. There's the buy at the 403 that I showed you on WaveTech, and now you see that we're up at 437. So even though it caught that breakout day, that it's smart enough to know it's got to get back in. Hey, Andrew. Thanks for this super chat. Appreciate it. Yeah. Yeah, there's interesting question here, actually. And so can you talk about a trading platform that brokers don't front run your orders, et cetera? Obviously read the Zero Hedge article. Listen, I don't know how to tell you, I don't know how to break this news to you folks, but that shit has been going on since the day I walked in on exchange in 1979. That's how people have always made money. This is why when we went to zero tickets, no, ticket charges anymore, when Schwab moved last fall, of course, Robinhood started it. And Robinhood was an arbitrage model to begin with, and everybody was doing what Robinhood didn't do anything unique, by the way. They just did what everybody else was doing, except for they didn't charge a ticket fee. Everybody else were stealing money big time. They were charging ticket fees and doing what Robinhood was doing. And that's the way it's always worked. Market making, I worked as a market maker for years, and I can't tell you how excited we got when we saw a Charles Schwab broker walking toward our pit. It was like, oh my, there's free money right there. And I used to joke that membership has its privileges, the old American Express marketing line, and because we could buy the bid and sell the ask. That the guy coming in from Schwab was going to be buying on the ask and selling on the bid. It's just always worked that way. Yeah, and yeah, listen, Rob, I would like to partner with Robinhood on my next project that I'm working on, to be honest with you. There's a lot of stuff. They've got a very simple UI. I think it's very good. So I listen. The world of broker dealers and how business is being done is going to change substantially. It's not the landscape's going to change very quickly. A lot of these old brokers were probably in phase 3 of the brokerage world, and the next phase is going to be, I would expect that you see the likes of Apple and Google getting more involved in the financial space. Just wait for it. It's coming. And a lot of the traditional brokers, the Charles Schwabs and the TDs and those folks, Interactive Brokers, all of these guys are going to be, they're going to be challenged. There's going to be some new technology. And yeah, so anyway, so as far as front running, it's always going to be there. People are always going to sell your order flow. They don't want to take the risk. What happened, a couple of things happened. I'll just go just a touch more into this. What happened was when decimalization came in, the market making got killed at that point. It became very hard for market makers to make money. When back in the day, we used to trade 16ths and 8ths and quarters, and we could scalp that bid ask. It was we used to call them a do. When you come in, you see this order, you just do it, and you're going to make $12, $24, and you're going to do it 50 times or 100 times, depending on the order, and you're just going to scalp that order. That's just how it worked, right? It was free money. You do a bunch of those every day, you make a lot of money. And there were a lot of guys that were on the trading floor, especially in the market making days, that left there and never took a overnight position home. If they did, it was an accident. So you're just going to, that part of the market is okay, it's healthy, because that's where competition exists as well, even though maybe we're the pawns, we're the ones that are paying for that order flow on the outside. All right, let's see what else we got here. We're 3 minutes from the close. Let's go over there and let's just watch this thing. Look at this, they're pumping this thing into the close. Interesting. Hadn't looked at it for a while, been doing all this stuff. So we're printing at the highs on the close here. I'm going to do one thing real quick. All right, I'm going to go back. Yeah, we can see where the S&P high 3305, so we took out that R1 number. You see it there, R1 3303, 3314. Yeah, the bid won't go away. What's going to be interesting, folks, I'm anxious to see our run tonight on our database to see if we continue to see that selling in the background. The indices look good, but does anything else look good? I think it was Friday that there was a 3-to-1 negative rotation in the markets. Otherwise, there were 3 stocks down for every 1 up. But, you know, here we are on, this is the final 2 minutes of trade, and we just printed the high of the session. So they're going to take them out. They want to take them out over 3,300. I've talked about this. I think we're going to 3314, 3324 is on a grid today. There's some Fibonacci numbers I've talked about that we're going to go up there. But, you know, there's no rollover in this market. That bid just will not go away. And we do have ADP coming out in the morning, so that might be some short covering into that number as well, where people are squaring up some orders. You can see here we're literally trading 2 ticks off the high of the session. Looks like they're going to punch them out here. This is the final minute right here. There we go, new highs. There they go. Classic, right on the close, man. They print 33.50 on the close. And yeah, they just printed them right up into the close. Classic. Let's look at the 3306.84, 3306.61 last print. Now we're looking at the runoff. This little window I popped up here is the S&P cash. So you can see what that window's doing there as far as activity. 2.3 billion shares. Yeah. Yeah, who decides where the market closes? Good question. Most of this stuff is institutional squaring up of trades on as far as mutual funds, ETFs, rebalancing, those type of things come into play literally in the last 10 minutes. Has a lot to do with those buy and liquidation orders. So the institutional guys and the players there are really pushing it. Yeah, so the 3-2 and 1-2, Aaron, is there are 2 models that we have. If you have time, even if you don't, watch our Thursday live cast or watch the replay of Thursday, and we'll see what's going on there. So yeah, so pretty cool, guys. We have 4,200 people on show up at the show today. It was awesome. Gonna wind it down. I'll probably do a couple more things and we'll call it quits for today. Usually I've got a meeting at 2 o'clock and you guys want me to be on it because we're working on the cryptos, and that's going to be awesome. I appreciate my European crowd for staying up late. I do the same for you every night, so I can I have to figure out a better schedule in life, but it is what it is. Yeah, I typically post our daily videos. I post them at around, I'd like to get them out, to be honest with you, about 11:30 Pacific time, about a half hour before London. But I've been failing lately. I actually had gotten a new piece. I've upgraded my software, and I can tell you so far, I'm not happy with my upgrade. I'm having all kinds of issue with my software that I use to create these things. But I really appreciate it. Everybody spending the time today. I really enjoy these, so we get a good thing. Hey, Brett, are you going to be around in a half hour? Just give me a yes. I'd like to just catch up with you for a couple minutes if I can. Richard, that's hilarious. Okay. Yeah, before you guys leave, there's quite a few on here. Pound that like sign. Let YouTube know that we're doing something that's worth watching. You know, I enjoy this stuff, and it's kind of random, 2.5 hours, but it's fun to do, and I'll put up a quick Wave Tech commercial at the end here. Just if you haven't tried our product, try it. Go to this go to this website, kendallreport.com/wavetech. There's some videos there and stuff that you can find out about it. We do training every week live on the internet, and we go through a lot of details. This product gives you the ability to track all of our signals that we do, plus build very unique portfolios. You basically can build your own mutual funds. We show you how to authenticate them, how to update them, do all the things necessary. You sure you were joking, Elaine? So DIS got clipped, huh? Interesting. Yeah, anyway, folks, yeah, go here, check it out. You know, we're really trying to bring some things out to the public that we've never done before. The product is an old platform, but like I said, we're working on a lot of really cool stuff. I call it the 1968 Chevy. It's got brand new tires. It's got 396 engine, 396 horsepower with brand new tires and a paint job. Yeah, Eric, probably the best thing for questions is to use the comments within the software itself. That's probably the best place. That'll hit a bunch of us, so we can track that. Yeah, I can tell you that we looked a lot at the TOS platform, and the answer is, at the moment, probably my indicators won't make it to TOS, and it's TOS's fault they're an open source, and for me to go to TOS is giving all my algorithms away, which I can't do, and possibly there'll be a place and time, but that, you know, TOS is an old platform they just kind of kept alive, and you know, and it's got a decent charting package. It's yeah, it is what it is. It's a good platform. I'm not knocking it. Yeah, so you would on WaveTech, you actually still use your brokerage account, and we are working on some things that will help you to route the orders directly to your brokerage account. Hopefully, in the next, well, we'll just be optimistic. Next several months, it'll go from there. Hey, Joel from New Zealand, we're getting ready to sign off, man. So. I've been to Auckland. Jay and I both lived in Australia for a while. Hey, Brooks, good to know you're around, man. We should catch up. Yeah, I think there's some lines, and matter of fact, Jay, if you have a bunch of those times, if you can put them into Skype, maybe we can put in on the community section, we can put in some of the marks where I talked about different markets, Joel, so you don't have to like skip through this whole thing. You know, trying to figure out where things are at randomly. That would be a little tough. But anyway, man, I hate leaving you guys, but I will be back tonight with a video as usual, and then tomorrow night a video, and then Thursday WaveTech training, and then Thursday night will be the final video for the week, and on Friday I'm just wiped out. Oh wow, okay, yeah, that's awesome, Brett. All right, guys, signing off. Thanks again. Have a great rest of your days, and maybe those of you who are going to bed, enjoy that. And we will talk to you tonight in the video, and then Thursday at the WaveTech. Thanks again. Oh, I gotta answer Steve's question before I go. No, there's a one of the guitars in the background is a jazz bass. I'm a bass player. I always say I'm a bass player. I wish I could play guitar better. I do have Les Paul, and I've got one of the coolest digital basses you've ever seen, fretless bass. It's really cool. But anyway, it's actually a Fender Jazz is the one I think you can see. Next to that is acoustic, and the I know you can't see all the guitars, but the one next to that is actually this really cool 5-string fretless digital bass. It has no pickups. It has digital. It's the coolest thing ever. So if you're a guitar player, you know when you ring a string, you pluck a string and you have magnetic pickups, the string slows down. With the digital, when you hit an open string, it will ring forever. It's amazing. It just goes on and on because there's nothing to slow it down. So it's like really, really cool guitar. I bought that thing probably about 8 years ago. I saw it somewhere on the internet. I go, I gotta have it anyway. But yeah, no, really cool stuff. I started playing bass guitar when I was 16 years old. I don't play as much as I'd like to anymore, but I think about it a lot. And one of these days I'll have more time. I will definitely get my chops back. They come back pretty fast. But anyway, thanks for asking, Steve. See you guys.